Welcome to the Transparent FX Academy. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which has been creating a series of higher lows. Every time the market has been moving up on this trend line, which has been developing all the way from back here, every time the market has created higher lows. And at the moment, we just created yet another higher low at this higher low area, and the market already started rejecting that zone to the upside. So in a situation like this, more bullish price action could be expected. Dropping down on the weekly time frame, what we can notice is a perfect inversion of trend, fueled also by strong institutional buying. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that we are seeing a rejection at a higher low area from a monthly standpoint. And here on the weekly, we have to keep in mind how the market is shifting from creating a weekly lower lows and lower highs to now starting to create weekly higher highs and higher lows. Now, in this case, the inversion pattern was a triple bottom. In fact, exactly at this level, the market created three lows, so a triple bottom, which is a popular inversion pattern. It is quite common to see the market shift from a bearish trend, so from the creation of lower lows and lower highs, to then failing three times to create lower lows. And then at that point, the market inverts the trend and shifts from lower lows and lower highs to higher highs and higher lows. Now, in this case, we can also notice where the structure is, because if we zoom in here into the most recent price action, we can notice how this area that was acting as previous support back here, from which this rejection to the upside was created, then got broken to the downside, and that previous support became resistance here and again here and again here. Now the market broke back above that zone. So all that previous resistance is now turned support. And what we could expect is a potential test of the level and then a rejection to the upside, essentially for the market to really start to create weekly higher highs and higher lows, as we have just identified. Dropping down on the daily time frame, what do we see? Now, here on the daily, the situation is quite clear. Now, I did speak about USDCAD just a few days ago after the market created this M pattern. And what I explained was all the reasons for which after the creation of the M pattern, I was expecting a push higher and completion of the pattern at the neckline. And that is exactly what the market did. The market rejected to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, here in the daily, the price action is very clear. We can notice how after this strong impulse to the upside, the market moved to the downside, created this inverted head and shoulders, and now it is pushing higher. Now, what this means is that simply the correction seems to be coming to an end, because if you see an impulse, then the correction starts, creates a new lower low, equal high, equal higher lower right here. And at that point, the market creates a rejection to the upside that is in inverted head and shoulders. So left shoulder here, head here, and right shoulder here, which simply means that the correction is coming to an end and the market is ready again to create higher highs and higher lows, which is in fact what the market seems to be printing here. So there is good probability from this level of support and demand to see more institutional buying of USDCAD and for the price to potentially move higher, rejecting this level here, which was previous structure resistance here and here, which is now turned support, because as we know, in the market, previous resistance, once it is broken to the upside, becomes support. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the CAD, the first thing that we have to keep in mind is that if we're looking at the CAD, we are already looking at CAD USD, because all currencies on the spot are traded against the USD. And since we see here that institutions are shorting the CAD, it means they are actually longing USDCAD. And that is exactly what institutions are in fact doing. They added 7,900 shorts on the CAD, so longs on USDCAD, and closed 2,600 longs, so they closed shorts on USDCAD. So what is actually going on is that institutions are adding longs and closing shorts on USD CAD because they are shorting the CAD. And in fact, net positions reached minus 90,000 from the minus 70 that they had here, with shorts getting increased on the CAD, so longs on USD CAD, from 78K to 110K. So let's keep in mind that institutions are longing USD CAD and moving back here to the technical side. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now, back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a rejection higher away from this level. That definitely wouldn't surprise me, fueled by strong institutional buying. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.